in October of 2013, the FDIC had sent a letter to thousands of their directors and officers of community and regional banks. The letter stated two things. One, that every director and officer should review their D&O policy. They should check their exclusions and endorsements and make sure there's nothing different this year than was last year. And two, that civil money penalties are specifically neither insurable nor indemnifiable, even if the directors and officers were to pay for that out of their pocket. The D&O carrier's response to this letter is a bit nebulous. They're stating that applicability of coverage is based on state and federal laws. They're stating that they can remove the endorsement, but only at your request, or you can leave the endorsement on. If you leave the endorsement on, you're out of compliance with the FDIC letter, and if you take the endorsement off, you're subject to the deductible that applies. My advice to the bankers with regards to civil money penalties is to closely evaluate the endorsements they have on their policy. Prior to the letter, we were recommending they had the endorsement which covered the fines and penalties. We are now looking to modify that to have the same limits, no deductible, but to cover all defense costs and expenses, to specifically not cover the fine, thus being in compliance with the FDIC letter. So the other part of the FDIC letter is that the directors and officers understand all of the endorsements and exclusions in their policy. It's our recommendation they should have a board presentation where the insurance broker or professional goes over all the exclusions, all the endorsements, and specifically looks at any changes from last year.